JP Morgan, the most influential bank in the United States, has just issued a strong warning about Bitcoin. However, behind this statement lies a clear attempt at market manipulation. This isn't the first time we've seen something like this. A few months ago, JP Morgan claimed Bitcoin was used for illicit activities, such as money laundering, terrorism financing, and drug trafficking. But shortly after, it was revealed that JP Morgan was involved in BlackRock's Bitcoin ETFs, exposing their double standards. Now, JP Morgan is predicting a Bitcoin crash due to microeconomic risks. But interestingly, when inflation was higher, they weren't making these kinds of statements. Now that macro data is improving, they're suddenly creating fear and uncertainty in the market. The goal seems obvious: trigger a sell-off so that large institutions can buy at lower prices. Meanwhile, the crypto market remains in the red, with Bitcoin at $81,000 and XRP at $2.25. Uncertainty is dominating the landscape, especially with Donald Trump and Vladimir Putin currently holding talks. This meeting could have a major impact on global financial markets as geopolitical tensions continue to rise and the threat of a trade war looms large. The effects of this global situation are also visible in the stock market. The Nasdaq 100 has dropped over 315 points due to growing concerns, and the S&P 500 has lost 80 points from its recent high. Companies like Tesla have seen a 10% decline in just 2 sessions. The traditional stock market struggles are also dragging down the crypto market, reinforcing the strong correlation between equities and digital assets. However, U.S. inflation data shows a steady decline. Since January, inflation has been cooling, reaching annual lows. This strengthens expectations that the Federal Reserve might cut interest rates in their next meeting. The big question remains: will they actually go through with it, or will they continue manipulating the market to keep prices down? Another key factor is the U.S. government strategy regarding cryptocurrencies. The U.S. is planning to create a strategic reserve of crypto assets, including Bitcoin, Ethereum, Solana, Cardano, and XRP. It's clear that they won't buy at high prices. They want the market to remain low so they can accumulate at a discount before launching the reserve under optimal conditions. At the same time, Bitcoin maximalists have spent years attacking XRP and gold, insisting that Bitcoin was the only true store of value. But current data proves them wrong. XRP and gold are the only major assets in the green this year, up 10.4% and 12.4% respectively. In contrast, Bitcoin is down 10%, Ethereum 41%, and Solana 32%. These numbers completely dismantle the Bitcoin maximalist narrative, proving that XRP has real utility and a strong competitive advantage over Bitcoin. What do you think about JP Morgan's market manipulation and the current crypto downturn? Drop your thoughts in the comments. If you found this analysis useful, leave a like and subscribe so you don't miss any updates on XRP and the crypto market. See you in the next video.